Hi everybody, and welcome back to FANG Friday. This is Ross Healy, the chairman of Strategic Analysis Corporation and a senior portfolio manager at McNichol & Associates Asset Management. Well, the FANGs had been rallying, a number of them back up towards their breakdown valuation levels, but this week had erased a good chunk of that strength. So things are pretty much as they were about 2 weeks ago. It's almost as if the market said to itself, okay, we've had the expected rally, but now let's get down to business. And this reinforces my point. Being able to reassess where you should be and should not be when markets are weakening can be critical to the health of your portfolio. And this is where our SVA service can perhaps be of the most value. If you have been enjoying our charting methodology and my analysis, and you are not yet a client, but are interested in learning more about this methodology which can help you in times of extreme uncertainty, as things are today, then send us an email at info@strategicanalysis.ca and tell us about yourself and your investment journey. We can have a chat and see if our service is right for you at this time in your journey. Anyway, right now we really need to take a closer look at the FANGs and what has been going on. But as always, before I do like to say thanks to everyone who likes this video and all our subscribers. It really helps to grow our channel and we appreciate it greatly. Okay, let's start off with Alphabet, and the stock remains comfortably above its mid-super growth price. That's 5.5 times book value. It's trading not too far above its fair market value, which differentiates it from a number of the other FANGs, and that fair market value is actually improving. So let's see when the company reports if that picks up even more. Amazon, I wanted to show you the long picture of Amazon for a very, very good reason. And that is, look at the fair market value and then look at the stock valuation in price to book terms. It's amazing just how well that the ups and downs are tracked. And when we went into this stair-step downtrend in the fair market value a little while ago, look what happened, eh? The stock dropped 1, 2, 3 breakpoints before rallying as the pickup here in the fair market value occurred. Now, what's really interesting is, of course, we have this strong pickup in the fair market value just as the stock is sitting right there just underneath its bubble price where it had actually given us a confirmed breakdown. Now, the company is reporting next week. It's going to be very interesting to see how strong the numbers are and if it's able to keep that upwards pressure on the fair market value. Maybe the stock will break out again. Stay tuned. Apple, I can't say anything about Apple. It's going to report on November the 2nd, and it just remains in a very mild downtrend. NVIDIA, NVIDIA actually came down to its HB6, which had been its very, very long-term high, and has broken down. Now, it did have a little bit of a rally earlier when Taiwan Semiconductor reported its numbers, but nothing, I think, very outstanding. It's going to be interesting to see when NVIDIA reports whether this powerful uptrend in its fair market value, its earnings, of course, its earnings forecast, will prevail, or, as I personally suspect, that those huge margins in the second quarter are actually maybe unsustainable. Netflix was in a really actually a powerful downtrend day. Had an amazing jump yesterday, up 55 points. But look at the shares in the context of that downtrend, and it just has registered a bit of a blip. They were strongish today, so it's going to be interesting to see whether that downtrend can be reversed. I had been actually hoping that we would get down to the mid-super growth price, 5.5 times book, to maybe give us a kind of a clean buy signal. However, we don't always get everything we want. Meta is very interesting. Look at this stock. It's just been tightly hanging under its mid-super growth price. Okay, it had a little tiny one day, I think, of a breakout, but that's been it. So very clearly, the market is waiting for something. Microsoft had been rallying, perhaps on expectations that the Activision Blizzard acquisition would go through. Unfortunately, when we look at the intrinsic value of the company, however, we don't see that there's much of a hint that if it does go through, that there's going to be much of an impact on the company. We'll see soon enough. Finally, Tesla had been struggling to get up to its HB3 and actually break out, but there has been considerable signs of weakness in the electric vehicle market, and the stock is now slipping back. What is of interest, of course, here is when I look at the fair market value. Okay, if Elon Musk's optimism is on the money, we should, I think, have seen more strength in the fair market value in its earnings here as well. Now, to summarize, the one bright spot among the FANGs, Alphabet, continues to hold fast above its mid-growth price. That's 5.5 times book. In comparison with just about everybody else, Alphabet seems to be reasonable value, and the shares are still trading above key support, but I repeat, they must hold. Amazon is reporting next week, and I am curious to see if that nice little uptick in the fair market value trend continues. But there is no change this week as far as our sell signal is concerned. NVIDIA had a bit of strength as Taiwan Semiconductor had sales and earnings that beat expectations, and the stock was strong as well. Why, I don't know, as both were softer than a year ago. Go figure. No change in the SVA outlook, however. Apple, Meta, and Netflix, all of which have broken support in recent weeks, remain in downtrends. You can see, however, that Meta remains very close to, but under, its mid-super growth price, 5.5 times book, where it has been for some time now. They're reporting next week. So my guess is that the market is hopeful, but not necessarily optimistic, if you see the difference. Netflix is having, or has had, I'm not sure which, a bit of a rebound following its third quarter report, which was very strong, no question. Apple does not report until November the 2nd, so we have a bit of a wait ahead of us. Well, Microsoft has finally got its hands on Activision Blizzard. But the question now is, what is the bottom line for Microsoft? And what will be the balance sheet impact as well? I have not favored Microsoft for some time now, so I can wait with equanimity for the time being without changing my own expectations that HB1 price will still come into play. That's 9.5 times book. I have to say that if the impact is likely to be strong and positive, I am surprised that the analysts have not given us a bit of a hint of that outcome. That leaves me with Tesla. Surprise of surprises, Elon Musk was very uncharacteristically cautious. He is clearly dialing back expectations for Tesla after the company fell short of the estimates for its third quarter profit and sales, declaring that even a great ship has challenges in a storm. I'm not saying things will be bad, he said. I'm just saying they might be. Well, you know my concerns. Tesla's struggle to grow the way its investors are accustomed to reflects the suddenly frigid state of what has been a red-hot electric vehicle sector. In just the past few weeks, General Motors and Ford dialed back electric pickup production. Volkswagen scrapped a planned EV factory in Germany, reduced output at 2 existing facilities, and laid off workers as the order intake dipped below its targets. And a company called Volta Trucks, kind of a buzzy Swedish startup, is following its bankruptcy, its battery supplier into bankruptcy. Now, go back 100 years, and you can see what happened to the early automobile industry when it was consolidating from overexpansion back then. Same song, second verse. In closing, Jerome Powell may be navigating by the stars under cloudy skies, but things are not so cloudy that he's able to say that the Fed is staying on hold and is keeping a future hike on the table. En tout cas, the stock market has a mild case of jitters and is just hanging on. No panic yet, but don't get complacent. Now more than any other time, investors need a solid grasp not only of the rewards that the market offers, but also the risks that are entailed. Anyway, for now, this has been Ross Healy, the chairman of Strategic Analysis Corporation and a senior portfolio manager at McNichol & Associates Asset Management, reminding you that nothing, including investing, is difficult if you have the right tools. I'll see you next Friday.